Everybody, it is Jake with TrendSpider for today's chart roundup. So today we are going to go over a few different things. One, how the monthly charts close. So last week we were talking about the monthly charts really setting up into May. And today, since those monthly charts are finally closed, we can start looking at how they look into the summer months. And the main thing that you're going to see across the board is the longer term breakouts that have been happening across SPY, QQQ, IWM, Dow Jones ETF. So pretty much all of these longer term broad market ETFs are breaking out. So if you can see my chart here on SPY, we have the monthly chart set up here. And you can see that we started poke our head above this long out last year, but you can see that these names like DIA, SPY, IWM, they're just starting to make the move this year. So we'll have to see how May goes. We already talked about the seasonality over the last 5 years. So if you go on TrendSpider and go to the seasonality widget here, we can look at the monthly view since the 2016 lows here. And you'll see that May, June, July all have very strong win rates. And so just because you have a high win rate, for example, here on DIA, we have an 80% win rate since the 2016 beginning of 2016. But it is something to consider that March also had a 20% win rate and we still closed green. So just because there's a low win rate or a high win rate doesn't really mean a ton. It just is something to add to your analysis. So it's not like you want to go in and just look at the seasonality for the Dow Jones over the last 5 years. You want to also look at the technicals. You want to look at the overall markets. You want to look at, the macro side of things. Janet Yellen was talking about interest rates today and, possibly raising them because the economy, if it starts heating up. And that's something that we can talk about real quick on TNX. So one thing to note, when the Federal Reserve is talking about interest rates, they're not talking about raising the 10-year Treasury note. That's something that is a kind of a free market mover. When they talk about raising rates, they're talking about the federal funds rate. And so that's something to keep in mind that, it is important to look at these, different charts, but at the end of the day, the Fed is not moving these charts. They're moving the federal funds rate up or down when they say they're raising rates. Now, the federal funds rate going up can definitely have an impact on interest rates for other vehicles such as the 10-year or the 30-year or things like that. So just remember though that it's not, the federal funds rate isn't something you can really chart out, but you can still get an idea of what the longer term rates look like. And you can see here, we're still in very much a downtrend, even though rates are up from the lows in 2020. Rates are up, 340 to 350% in some cases. So that's a pretty strong move up. And one thing I'll mention is just because rates start dropping, there's been times in the market where rates are dropping with the with the market. So in this case, you'll see here if we look at the let's go to the regular candles, not the raindrops. And you'll see here, especially back in 2000, especially, rates were dropping with the market. So just because you have declining rates, especially on, let's say, the 10-year, doesn't mean that the price has to go up. You can see here at the top of the dot-com bubble, that was the top of rates. And then you can see both of those were dropping together. Same thing in 2007, 2008. The market was dropping, but so were rates. So that is definitely something to keep in mind when looking at interest rates versus the broad markets or, the Qs or anything like that. So it is something to keep an eye on. And it was definitely a narrative back in February and March of this year, but it's not something that, is always going to move the market like it did. Sometimes they just throw in something in the news narrative just because there's really nothing else that makes sense as far as why the market's moving. And sometimes the market just needs an excuse to move. So in this case, we'll move on to an interesting case study this week. So if we look at Amazon here and we look at the daily chart, one thing that I want to point out here is the fact that, a lot of people are looking at Amazon and they were saying, oh, there's no way that this thing is not going to hit new all-time highs and, all this stuff around Amazon. But one thing that I wanted to point out, and something that actually we've looked at before, we looked at this same type of example on Facebook a couple weeks ago. Into earnings, we were outside of these weekly Bollinger Bands. So what we're looking at is we're looking at the daily chart, and then we're looking at the weekly Bollinger Bands overlaid on top of the daily chart. And Amazon was a great example of this. I mean, if you just were able to see that the daily price was pretty overextended outside of this upper band, you would have been able to see that, we're starting to get a little overextended. And that's exactly what happened. We did initially gap up after earnings, and then we just absolutely tanked after that. And people are wondering, well, why is that? Earnings were so good. Well, if earnings are good, that's great. But if you're in a technical area where you're overextended, the earnings or the news can be the sell event. And that's exactly what we had here. Nice wick today. So that's something to consider going into tomorrow. But still, we undercut these previous lows. Anytime that we've really been outside of the weekly Bollinger Band or been near it over the last, let's say, 6 to 8 months, this is generally an area where price moves back all the way to this basis moving average. Now, not always. You can see here back in during the COVID times, we bounced outside this weekly band and then just kind of pulled back a little bit before moving up. But for the most part, you'll see here that, over the last at least 2 times since September and then in February, we did pull back at least to the middle band here. And then you can see back in February, we pulled back all the way to the lower band going into March. So this is where you can go in and you can set an alert on TrendSpider. So let's say that you're watching maybe the weekly SMA 20 below. You can right click and create an alert on this level so you don't have to watch the chart all day. Watching the chart all day is great, but it's not something that is really efficient, and it's not great when you're letting emotions get to you and you're not sticking to a plan. So being able to create alerts like this, and notice here, I'm creating an alert more or less on the zone around the line rather than right at the line. And so you can see as I move this back and forth, it will get bigger and smaller. And, if you would have had the sensitivity all the way to the right here, or at least probably 3/4 of the way, you would have been able to capture that price action today and either, gone long, cut your loss, whatever the case is, you would have been able to do that with this alert. So if you are using TrendSpider or you are thinking about it, make sure to check out the alerts. This can save you a lot of time and just frustration. So as we always say, you can try out TrendSpider with the BZ25, 25% off coupon code for any plan. Just go to TrendSpider.com and use BZ25. That's B as in boy, Z as in zebra, 25 for the 25% off. So going on to a couple other examples here. One thing that I wanted to mention here is, a little bit of a red flag going into the last probably 2 weeks here. And this is something we touched on back in mid-April as well, when the market was a little getting a little overheated. So what I have here is I have the VIX chart on the daily chart, and I'm going to compare this with the S&P 500. So I'm just going to go change this to SPY. And what you'll see here is something pretty interesting. Now, a lot of people use divergence, right? They use divergence on the RSI or the percent range or maybe the MACD. But, this is something that you can also use just comparing 2 different assets. So in this case, or vehicles, for example, I wouldn't say VIX is not an asset, but same thing here. VIX was showing these higher highs, these higher lows pretty much since mid-April. And what you can see here is SPY was hitting higher highs here while the VIX was hitting higher lows. So generally these should not be inversely correlated like this. Generally you want higher highs on SPY, lower lows on VIX. Instead, you are getting these higher lows on VIX and these higher highs on SPY, which was a red flag. And we finally did get that resolution down today. And, it will be interesting to see if we pull back. I mean, at this point, it wouldn't be a bad thing to pull back a little bit. If we look at kind of some of these shorter term timeframes on the broad markets, starting with SPY, we've got quite a few gaps below. You can see here's a gap right here below. You can see that there's a gap up here as well from today. But if we did fill this gap below, I mean, it wouldn't be the worst thing, because if you look at this overall trend, we're still going to be hitting higher lows here, even if we did fill the gap. So at this point, filling the gap would be healthy. It would have the market reset a little bit. It would be nice to retest that longer term monthly resistance that we were just talking about. So all of these things would be good for the market. Now, the question is, do we get there? We'll just have to see. But for the most part, most of these broader market charts look like this. So SPY, gaps below, shown by this automated gap detection. Here, same thing on the Qs. You have a ton of gaps below. So we filled this gap here. We tried to start filling this gap here from April 5th, but we still have this full gap below here. We have two more gaps below. So, that is definitely something to consider, especially on the Qs, where, we have some pretty big gaps below, and it's just one of those things that you don't want to have that many gaps in a row without filling at least a couple. You just want a little bit of a reset in the market. And I mean, we've had a decent reset already. I mean, since the highs on the 29th, we hit almost -5% from the high to the very low today. So that's a pretty strong move down so far. And if we did fill that gap, that would just be that much better. But that's a pretty strong move down, 2-day move down. So it wouldn't shock me to get a little bit of a bounce here. Now, if we look at the anchored volume by price and just get an idea of where a majority of shares are holding, this is where things get interesting. If we anchor the volume by price from this March low, you'll see that we're kind of in this volume gap. And we've talked about the volume gap quite a bit over the last couple sessions here. And you'll see that, it's definitely something that allows price to move very quickly once you're in it. This kind of acts as a vacuum for price. And so you can see here that we were holding at this previous shelf of volume. We broke down through it, and price was able to free fall pretty quickly just because there's not a lot of volume holding in this area. Now, this is where you can go and anchor a VWAP from the swing low here. And you'll see if we did pull back, this anchor VWAP from the March 5th low is right around 322.50 or so. Now, obviously, as time goes by, this is going to change as more data comes in. But if we did continue down tomorrow or in the next couple days, this anchored VWAP below would be an area to hold. And you can kind of see using the anchored volume by price that this little shelf of volume here is also almost right in line with that anchored VWAP below. So that would be an area to watch around 322 to 324, 325, and we'll see if that actually holds. Now, going into IWM on the daily chart, you can see here that we pretty much pulled back right to this volume shelf here. So if we anchor from the swing low, let's delete some of these annotations here. You'll see on the IWM chart, we bounced right at the point of control, this shelf below. So if you're using the anchored volume by price, or if you're watching me use the anchored volume by price, you're not exactly sure what this is. It's the ability to see where volume has aggregated and taken place since a particular point in time. So in this case, I'm looking since the low that we saw on March 25th, where are a majority of shares holding? And you'll see here that a majority of them are holding right around this 221 to 223 area. So the price is able to bounce here simply because a lot of these shares are back to break even. If you bought IWM last week or the week before at around 220 to 222, and then the price goes all the way to 230, you've got some profits that you can sell. Well, some people can sell all the way down, adding supply onto the market. But once we get back to this yellow shaded area, which is where a majority of shares are holding, then the supply is going to dry up and you're likely to get at least a short-term bounce here. And that's what we saw today. Same thing on Tesla. I mean, Tesla is kind of fighting for its life here at this volume shelf as well. You can see here if we anchor the volume by price from the March lows as well, we are actually starting to undercut this volume shelf. So something to consider if we anchor the VWAP from this low, you can see that we did close below it. And that's something to keep in mind as well. Now, I think this gap below is too small for the automated gap detection to capture, but there is technically a gap on Tesla from around 638 to around 641. So that would be an area to watch below if things start to break down, which honestly on Tesla they already have. This area right around 685 to 675 to 685 was the area to hold, and it just didn't hold. So these volume shelves can break down. They're not like the end all be all for price. Now let's see. We have something in the chat. What do you think of BHP? Do you use a stop loss if you can't watch the chart because of work? Generally, for me, I don't really use a stop loss for an automated one. I generally am in front of the chart most of the day. So if there's a level that I'm watching, I'm gonna manually stop out. I'm not gonna just have a stop out there. BHP. That was the one. BHP. Yeah, BHP is actually looking kind of opposite of what we've seen on a lot of these that we just went over. If you anchor the volume by price from this March 25th low, you can see that there's a decent amount of volume, holding at this shelf right here. So, this is definitely kind of your textbook setup where the price is actually respecting this volume shelf and you're starting to move above it again. Now, talking about stop losses, there's so many different ways to kind of set your stop, right? Somebody may have, let's say this area right here, this diagonal resistance as a stop loss. A lot of people use horizontal levels as a stop loss. So maybe this is your stop loss at this previous low. Maybe this is your profit target above. So my stop losses are generally a function of these previous lows breaking down. So let's see. So Fubo is a good example of this. Now, I did stop out of this one today simply because I'm not a huge fan of the weekly chart that's kind of starting to form here. You can see here that if we did continue to break down and we have this kind of diagonal resistance that may act as support, that would be around 1750, 1725. So, that's what I'm thinking could happen. I'm going into the week ahead. So I did stop out a little early on this one, but the market's kind of weird with growth names right now. If the market does continue down, the growth names are definitely something that, would probably get hit the hardest with some of that higher beta. Now, if we look at the MACD, when I'm trading, I'm definitely looking for the broad markets as well. And so if I think the broad markets may retest those areas of resistance, I definitely don't want to be in growth names that are probably going to, at least in a trading side of things. I'm happy to hold growth names on a longer term level. But, if the market's starting to possibly curl here with the MACD, it's not something that I'm, dying to be in, something that's kind of more of a high beta name like Fubo or some PLTR, some of those other ones. Same thing here, right? You can see on the MACD for SPY, we are just starting this cross here. So I've seen a lot of the time where the MACD can really start to kind of accelerate at this point. And so on top of the broad markets not looking great and growth names really not performing at all, that's definitely something to keep in mind with stop losses and just in general right now is maybe it would be a little smart to get out of names a little quicker than you normally would if the broad markets may be curling over here or topping out for at least the short term to fill some of those gaps below. So yeah, happy to answer that. Thanks for the question, Benjamin. So going into some crypto, let's see, BTC USD will be the first one. Bitcoin definitely is having trouble here. And, same thing that we've really been talking about for the last 10 minutes. These volume shelves and using this anchored VWAP and volume by price really allows us to see the supply and demand zones. So in this case, if we anchor the volume by price from this January swing low, and just to mention, on TrendSpider, the volume by price is unique on our platform because of how easily I can move this around, right? I can simply just move this vertical line and move it to the January swing low here, pretty much this pivot before we hit new highs, and it will automatically start the volume profile from this area. If I want to maybe start it from the all-time highs here on April 13th, you'll see that this changes up. This changes a little bit, and you can see that it definitely changes the perspective. So for me, the January swing low anchor point has really been the best anchor point because price has just respected this volume shelf on both the downside and the upside perfectly. And so until we get through this supply zone above, it's going to be hard for Bitcoin to really get going. And a lot of people seem to be kind of switching over to Ethereum. And that's also, I think, taking some oomph out of Bitcoin, if you will. So if we go to Ethereum, it's been an absolutely crazy week for Ethereum. You can see here that we've already had classic Ethereum type of moves and crypto moves in general with that big wick on the daily candle here. So one thing that I would mention here, same thing that we talked about on some of these other names, if you go to the daily chart and you want to see, where we could bounce, just look at the previous resistance zone. This area was resistance multiple times, and then finally it got through. And so it wouldn't be shocking for the price to pull back and retest this area below. That's generally pretty common. Anytime you have a breakout, you want to retest that previous resistance zone and show that there's proof that buyers are there defending that. So if we did pull back, Ethereum could pull back all the way to around 3,000. That's both psychological, just a psychological number, and it's that resistance below right around this area. So not the strongest candle on Ethereum. And one thing that I'll mention here is if we look back since the 2017 highs, you'll see here that going into May, June, July, and August, these are not incredibly strong months for crypto in general. Ethereum only has a 33% win rate since, the 2017 highs. So keep that in mind. I mean, we are in a bull market now, so you have to take that into account. From the 2017 highs, we're pretty much in a bear market. So the fact that we are in a bull market can sway that data a little bit. So even if we go back since, 2016, you'll see that seasonality definitely drops into May and June. June only has a 20% win rate since 2016. Now, if we went to something maybe more like that we have a little more data on, like Kraken, I think you can go back, until 2016. Same thing. June is definitely the worst performing month with a 25% win rate since 2016. So, this has been a ridiculously strong last couple months, and something to consider. We're up 1, 2, 3, 4, 5, 6, 7. This would be the 8th month in a row that we've closed green, and that's great. But generally, you do have to have some type of cool off period. But one thing that I'll mention here is if we do measure the move that we saw in 2016 to 2017, and then did that same measured move, we could be up in the 15 to 20,000 mark at some point for Ethereum. But you have to also keep in mind the market cap, right? The market cap back in 2016, 2017 was a lot easier to get bigger, right? If you only have $10 billion market cap and it goes to 20 billion, that's not like having $100 billion market cap and going to 200 billion. That's a lot more capital you need to increase. So just keep that in mind. Going from 3,000 to 15 would be a lot of money flowing into crypto to push Ethereum that high, but it's possible. So a couple questions. We can take a look at Ford. I can't recommend any buying or selling. I'm not licensed. That's not really my focus. Is not telling people where to buy, where to sell. It's just being able to show you guys, what the markets are looking like on the chart. everyone has a different strategy, right? So I can't go and say, hey, buy this when maybe, one, I can't legally. Two, you may have a 5% drawdown the next day and stop out, where somebody else may buy that dip. So everybody has their own way of buying stock. So I just can't recommend buying or selling anything legally, and just out of kind of what the point of this show is. Now, Ford, we can take a look at. Let's see here. So Ford, I have this trend line here that I drew not too long ago. I think I drew this maybe on the show. But you can see here that we are starting to pull back. We did test this trend line support below. At least we started to move down towards it. You can see that this alert triggered here. So it says triggered support. That's what I named it. So this is a great way and an example of using the alerts on TrendSpider and getting that alert and not having to stare at the screen all day. Now, on the Ford side of things, if we're looking back since pretty much 5 years ago, since 2016, May has a 33% win rate. So that is the second worst win rate, after August and September having a 20% win rate. So if we're looking at seasonality, definitely not the strongest win rate, with 33% of the time May closing green versus April's close. So that technically means 67% of the time May closes red versus April's close. So, if this trend line does not hold here, that's definitely a red flag, and possibly a longer term breakdown may be underway. It's one of those things that if enough people are watching this trend line support below, if it starts to break, it kind of becomes a self-fulfilling prophecy. So that is Ford. Let's look at a couple other ones. Let's look at Litecoin. Litecoin is an interesting one simply because, Litecoin is lagging Ethereum and Bitcoin quite a bit. Litecoin, if we draw a trend line or draw a horizontal level from the highs here, and the highs were right around 420 on Litecoin, we haven't even broken through these highs. Now, if you look at Bitcoin, we're already up like 225% from this high. So notice here, this was the 2017 high. This is kind of where we are, like maybe right here on Litecoin. So Litecoin doesn't have to make the same exact move, but if it did, you can get an idea, relatively speaking, compared to the 2017 highs, where we are. And so we are not even at the 2017 highs yet. Bitcoin is 225% above these highs here. So that's definitely something to keep in mind. It's not, what at the high right around 65K from the 2017 high, we were at around 226% above the 2017 high. Ethereum, a lot of people are looking at Ethereum. They're probably thinking, this is just FOMO kicking in. Or it's simply just the fact that Ethereum is only up about 145% from the 2017 all-time highs. So maybe Ethereum is simply just trying to catch up to Bitcoin's move here. And, that's something to consider when you are looking at crypto, is use something as a baseline. Maybe Bitcoin, Bitcoin is up 225% from its 2017 highs. You look at Litecoin, we haven't even hit those highs. You look at Ethereum, we're at about 145. So is Bitcoin going to continue leading the way, or are these coins going to come and catch up with that move that Bitcoin has had over the last couple year or so at this point? Sorry on the white background, Scott. Some people would say the same thing about the dark background. So it's just one of those things. It's kind of a preference thing. But anyways, on Ethereum, we're about 145% to the upside here. Now, Dogecoin, that is a whole different story. So Dogecoin, is up thousands of percent from its previous highs. So this is a whole different level of crypto at this point. So one thing that I'll mention that I just kind of mentioned with some of the other ones, this would be the 7th green month in a row for Dogecoin, which doesn't necessarily mean anything. It just means that that's an interesting fact. And generally you want to have some type of, pullback there. But one thing I'll mention too, if we look at the Dogecoin daily candle, and I think we talked about this last week, if you anchor the volume by price from this breakout point that we had back in early April, you can see a majority of shares were holding right around this 27 to 30 cent area, which created a base for price. So, it's not shocking that the price was able to really bounce off this area. Very similar to some of the other examples that we've gone over. Thoughts on ADA and its recent deal with Ethiopia? I can look at the chart. I'm not really that into crypto or what that news really is, but we can try to take a look here. Cardano. Let's see. Is there more? Oops. Yay. See if there's more info on it here. This, ADA Cardano is one of those ones that, we're already up from the lows put in on March 2020. It's up 7,000%. So, at this point, is news even really relevant? It could just be a sell the news event. We'll have to see. But just always keep that in mind that, these things that are up that much, it's easy for people to start selling and taking profit. This is why I also like the volume by price. So if you go here and you anchor from the bottom here, we'll see that a majority of people are holding way down here in the teens, 15, 16 cents. So a lot of these shares are up, 500%, 600% or more over the last couple months. So, that's something that could add to the supply side of the equation if some of these people start to take profits. XLM, Stellar Lumens. Let's see. Same thing. It's up a ton. It's kind of having a topping pattern forming here. And you can see a lot of people are holding it around 10 cents, some at 18 cents. So that's a couple 100%. A lot of shares are up. Now, doesn't mean that it has to drop that far, but it's just saying that if there's a lot of people holding profit and this starts to break down, those people are going to start selling, and then that adds to the supply on the market, and that's how you get a move down. So prices don't always have to move down because there's an increase in supply. They can simply move down because there's no demand. But in this case, if you did have some of these people holding from 10 cents, 15 cents, 20 cents, that's something to keep in mind. Could we look at some Forex? Sure. USD, so New Zealand dollar, USD. Yeah, it almost looks identical to XLM, to be honest. Same thing. They've kind of got this momentum fading, kind of head and shoulders here. If we look at the monthly chart to get a little bit of a better idea, New Zealand dollar to US, New Zealand to US dollar is just, it's a pretty volatile pair. It's just there's not really even, I guess you're still in an uptrend here. That's something to consider. We're technically hitting higher lows, but for the most part, it just is very random, choppy data from pretty much the beginning of 2020. Now, if we go into the shorter term side of things, the main thing I would be focusing on is potentially this head and shoulders pattern that's forming here. These can easily invalidate, but for now, you kind of have this topping pattern forming, and we'll just have to see if this follows through, or we would really need to break this area around 73 cents to invalidate this head and shoulders pattern that's forming. So looking at the seasonality, since over the last 5 years, since 2016, May only has a 33% win rate going really into the summer months. But you'll see here June and July have an 80% win rate for NZD USD. So that is something to consider as well, that we are starting to move into some of the strongest seasonality of the year for this particular pair. So This is how you can use the technical side of things with the seasonality side of things. So if you were looking at this head and shoulders, maybe you look and say, well, June and July are pretty strong months. That's something to consider. Thoughts on, let's see. Thoughts on PLTR, we can go over that. Is price by volume a foundation for demand of a certain price for buyers? Volume by price is just showing where volume has taken place. So anytime that the price is below one of these areas, it's going to act as a supply zone above. So Bitcoin's a good example of that. So if we're looking at Bitcoin and we're looking at the swing low here that we just went over, anytime the price is below an area, one of these shelves, these volume nodes, it's going to act as supply. So to answer your question, Ben, let's say that you bought Bitcoin at 57K and then Bitcoin went all the way down to 47K. Your shares that you bought would show up in this volume node up here because you bought at 57K. So as the price goes back down to 47K and then comes back up to around 57K, there's a chance that you or someone else that bought around the same time you did in this area would probably maybe sell some, take some off the table because they're back to break even. So anytime the price is below one of these areas, you have to think of these shares as they're holding at a loss. Because if you bought at 57K, the price is at 49K, you're holding at an unrealized loss. So as the price gets back up into this area, this is initially going to act as a supply zone because people are going to break even. Some people are either going to take some money off the table or all of it off the table. That adds to the supply. That's why we call it a supply zone. And so these green areas are going to act as bounce areas or what I call break-even demand because same reason. Imagine you bought Bitcoin over here at 47K. You get to 65K on Bitcoin, and then the price drops all the way back down to where you bought. If you haven't sold already, you're probably not going to sell at break even. So that allows the supply to dry up. And this acts as a break-even demand zone because this was previously an area where price was able to move up off of. Now, since the price is back here, all of these shares that were just holding at profit are now back to break even. So that's why we call it break-even demand. So it's not necessarily, one or the other. It's just a function of price. If the price is below a volume shelf, that volume shelf is going to act as supply. If the price is above one of these areas, it's going to act as what I call break-even demand. Thank you, Aurelio, for the kind words. I'm glad you like the short videos on Twitter. For those that want to learn more about the stuff that we talk about every week, I do post on Twitter on the TrendSpider page short videos that go over these types of things that we're talking about, such as the anchored volume by price, raindrops, seasonality, all of those different things. So let's start from the top. PLTR, we'll touch on. PLTR is just, it's just not, I think, one, it's a growth name that's just been one of those things that's been just destroyed. And then two, there's a lot of people that are very emotionally tied to this stock. So when you have that, you really have to have a pretty big flush to get those people out. Now, I'm not a big believer in, like a quadruple bottom or a triple bottom. If you're going to triple or quadruple bottom, generally you're going to break down further. Does it have to happen? No. But for the most part, could we have a bounce here? Sure. It's definitely been a bounce area in the past, but it is starting to look like we could be breaking down. I mean, if you look at where we started from back in September of 2020, we're still up well over 100% on this. So there's still a lot of people that are probably holding some profits from the IPO. So PLTR, not what I would call the strongest look right now, but a decent candle. One thing that I like to do is look at the raindrops when we have a wick like that. So here, notice that a decent amount of the volume is at the bottom of the range here. So that means that there was quite a bit of shares that were kind of dumped on the market and absorbed at the lower part of the range. Generally, we want to see these shares absorbed at the top of the range if there's any type of conviction by buyers. So in this case, if we go back to the hollow candle, you'll see that within that wick, there was a lot of volumes. If you're not familiar with the raindrop, definitely check out TrendSpider raindrops on YouTube. You can get the explanation of what they are. They're essentially volume weighted candles. So they allow you to see the volume profile of a candle. So you don't have to go into a shorter term time frame, let's say the 5-minute or the 10-minute chart, and see what's going on there. You can see what's going on for the whole day and where that volume is located throughout the whole day on a single raindrop chart. So that's something to keep in mind, that if you do have a wick, anytime volume's at the top of the range and you have a wick, there's definitely conviction by buyers. But if you have a wick and there's volume at the bottom here within that wick, that's not the strongest setup for me. If you have a wick like this, you don't want to see a lot of volume in that wick, because that means that you didn't have a lot of liquidity down there. But if you do have volume, like we just saw in PLTR, that could show that there was some pretty heavy selling pressure into today, and we could have possibly bounced on low volume. So let's see, PLTR is ER on the 11th. Yes, it possibly does. I'm not sure. Let's see, just I'll turn on the events tab here. Yep, May 11th is when it's coming out. So if you are looking for different ER dates on TrendSpider, just go to the events tab here, click on earnings, and you'll be able to see these earnings visually on the chart. So VS, yes, that is correct. Earnings on the 11th. We'll have to see what happens going into earnings. Now, going into Tesla, we did talk about Tesla already, but we can talk about kind of the rest of the week. We really need to hold this this volume shelf here. So if we don't hold that, that's something to definitely keep in mind going into the rest of the week. And if you look at the day of the week seasonality since the start of the year, Wednesday and Thursday are the historically worst days of the week so far in 2021. So not only are we possibly about to break down through this this support trend line here, we already kind of did intraday today, but somehow we closed right above it. So if we do break down through this trend line, I think a lot of people are watching probably this trend line. It could bring in some kind of self-fulfilling prophecy selling here. Everybody sees the break of the trend line. They kind of go in and sell. So not only do we have possibly a breakdown technically, but going into Wednesday and Thursday, these are the two weakest days of the week so far in 2021. So definitely keep that in mind. On the volume side of things, if we anchor a VWAP from the swing low here, we closed below that. Not the strongest bull case. If we anchor a VWAP from the swing high here back in January, we're also below that as well. So sellers are definitely in control. The average price per share since the highs in January and since the lows in March, all participants are essentially down, or at least the average price per share is higher than what the current price is, which would suggest a lot of people are holding at a loss from these points in time. So we'll have to see if this area holds. Tesla, a lot of the time, has a mind of its own. So keep that in mind as well, that sometimes the technicals don't always play out, but a lot of the time Tesla does follow seasonality pretty strongly, as well as the technicals on a breakdown. Just because so many people generally are technically trading this, it's definitely something to consider. Lulu, yes, I think. Sorry, Spy Girl, I missed that above. I know you asked first, so that was my bad. So here we go. Lulu, couple things here. I like to use diagonal trend lines. If we use diagonal trend lines, technically we broke down today. This could easily be a false breakdown. So, we'll see if this actually does continue down. But you never want to see a breakdown like this. Same thing if you see a breakout. That's a pretty strong sign. Now, could we do something like this and retest the breakout or the breakdown zone and then pull back? That's always a possibility too. So just always remember, if you're breaking out or breaking down, you're likely going to retest that area that you broke through. So in this case, it wouldn't shock me to see Lulu come and retest up to this trend line above and then possibly fail there. So that would be, I don't know, around 330, 331 or so if we did kind of retest that zone. Keep in mind, going into tomorrow, Wednesday only has a 29% win rate for Lulu. So 29% of the time, Wednesday closes green versus Tuesday. You can see here, though, that Tuesday has a 61% win rate. So historically speaking, since the start of this year, Tuesday generally is the strongest day of the week, but this was a very red day for Lulu. So you can see how seasonality doesn't always play out every time. These are simply historical win rates that you can look at. Now, just looking at this chart for a second, another area that you'd probably want to watch here is this previous resistance that is acting now as support. So you can look at this multiple different ways, right? Here we have resistance. We broke through resistance. Now we're just retesting that, and possibly this does act as support, and we continue up. So that's two different ways to look at it. You've got this support zone here that broke down, but you also have this longer term level that we broke through that we're simply just kind of testing this area to the downside. And this could easily be a reversal zone going forward. So Lulu, Wednesday, not the strongest day of the week going into Wednesday, but still something to keep in mind that we could be just retesting that previous resistance. I have like 2 more minutes, so let's just look at the weekly chart on Lulu as well. So if we anchor the volume by price from the swing high here, Lulu's doing exactly what we just saw in Bitcoin. Anytime you have this kind of setup, I like to highlight it green, which is where price caught a base to move up. Red is where price was rejected. And then this orange area is just where there's not a lot of volume holding here. And notice that this week we're able to move down very quickly because we have this volume gap. We don't have a lot of volume holding in this area, which allows price to move quickly through. So this is a good case study on having that move up very strong through this volume gap, getting rejected right at this supply zone, because imagine you bought Lulu at 345, you deal with a drawdown all the way to 270, you get back to 345, you're probably going to take some off the table, if not the whole position. Once you're back to break even, you're adding to supply on the market because you're selling, and that's why this acts as a supply zone, and a great example of that here on Lulu on the weekly chart. And then we've got that volume gap here that broke down. So that is Lulu. Hopefully that was helpful, Spy Girl, to check out Lulu. Riley, you the man as well. Thank you so much for the kind words. And yeah, I think that's about all the time we have for today's session. And if you guys do want to try out TrendSpider, all I've been using is TrendSpider for all of these chart sessions. You can try it out for 7 days free, 25% off, BZ25. So definitely check it out if you're interested. There's a ton of different things you can use on the platform, from technical to non-technical, such as the seasonality, insider transactions, analyst estimates, all of those different things. So make sure to check out the platform, and you can use it right alongside me when we do this moving forward. BZ25, 25% off. TrendSpider.com is where you can sign up, and you can follow us on TrendSpider at TrendSpider on Twitter. And with that, I will hand it back over to Spencer. Thank you guys so much for your time today.